Yo, what's up, family? What's up, friends? OG Larry coming at you on a snowy Sunday with three hot stocks. It's cold outside, but I got three hot ones for you to put in your pocket, keep you warm. So, with that being said, this is not financial advice. I'm not saying it can be used as financial advice because in investing in the stock market carries risk. So, you want to know your risk versus your reward and check with your financial advisors and all that kind of stuff. So, with that being said, I'm gonna get into three hot ones that I like for 2026 and beyond, because not only can these be nice swing trades, but they can also be good long-term stocks. When I say long-term, I mean 2 to 5 years, and from the way that I look at things. So with that being said, the first one I'm gonna put on your radar is Grab. It's the least expensive, but it's still a good company that might be worth looking into. Right now, it's trading at 458. It's been as high as $6.62 right there, I think. But the 52-week high is 662. I got in and it was like 536 or something like that. So while I might be in the red on it overall, I'm still looking at it to have potential upside. Kathy Wood, if y'all know who Kathy Wood is, she's a big time institutional type investor and fund manager that has a lot of money in Grab. And under $5, we won't see a whole lot of play in Grab. But in the not too distant future, we'll see this get over $5. And once it's get over $5, you see more institutions get involved. Institutions don't buy stock under $5. They don't fool with penny stock. But once it hits $5 and beyond, that's when institutions get interested. And once they hit the $10 range, they really get interested. So I believe once this get back over $5, you'll see more retail getting involved. It's the Uber of Southeast Asia. They expect to show a path to consistent profitability, and analysts expect earnings per share to turn positive this year. So trading at 458 is not really a bad deal. It had limited downside, and once it gets through that $5 resistance and sets there, it'll start to move its way up. So just put this on your radar for a potential 2 to 5 year play to see this stock make it to eventually back up to this all 52-week high of 662, and I see it potentially going maybe to $8 and beyond. So put that on your radar. And the next one I want to get into is SMR. No, we're gonna go. Yeah, I'm gonna go SMR because I got I'm gonna save my best one for last. SMR is a nuclear energy play. SMR is sitting at 1977 as we speak, but what they do, they build small modular reactors, thinking them as a next gen nuclear play, focused on providing massive carbon free baseload power needed for the future. So wow, they have other companies in this space, say for instance NVTS, that make gallium nitride chips, which are more efficient than the silicon and handling power. They're using EV chargers and slowed inverters and crucially AI data centers. So what we're talking about is the power that's gonna power these AI, these small nuclear modules are going to power AI data centers. And you guys know how big the AI data center boom is right now. So they're going to need power, and getting a company like SMR that was as high as it was in the 50s not long ago. Let me see. It was up to 57.42, and right now it's all the way down it's down way over half that. So it's probably down 60% at 1977, under $20 right here. So I have a position in this for about 125 shares that I got in the $18 range when I saw it become very attractive. But before it runs up, I'm gonna give everybody a chance to put this on your radar because you might want to look into it. It's the next gen power of the future, and these data centers are going to need power. And lastly, but definitely not least, is Archer Aviation. It's sitting at 861, and once this gets through that $10 range, you're going to see a lot of institutions get interested in it. Archer Aviation is, of course, they're going to be investing in flying taxis. So this is another Kathy Wood stock that she's heavily invested in. Uh, Approximately 31.3 million shares of Archer Aviation, and 1.65 of the total equity portfolio. But it's spread across three different ARC funds. Long story short, they have a big position in Archer Aviation, and they're betting on three main catalysts: NVIDIA integration. Archer's using NVIDIA's AI platform to power flight system, and progress toward eventual autonomy. The infrastructure is a winner because they recently acquired control of Hawthorne Airport, and LA positioned itself to be the official air taxi provider for the 2028 Los Angeles Olympics. That's a catalyst within itself. And the path to revenue, while still pre-revenue analysts expect Archer to hit nearly $1 billion in revenue by 2028 as they transition from testing to commercial operations in cities like in New York, Abu Dhabi, and Tokyo. So this is a risk versus, when it comes to risk versus reward, I think the upside has a lot more potential than downside, probably. So Archer Aviation is one to take a good look at, trading under $10, and once it gets over that $10 range, I see Archer Aviation hitting $12 to $14. So financially, they're moving from science fiction to commercial flights. Do you guys remember the Jetsons? If you're old enough, you know who the Jetsons. I feel like we're in the Jetsons in this day and age right now. But Archer has is getting ready to have us with flying taxis, and the flagship craft Midnight is down for rapid back-to-back 20-mile trips with a 10-minute charge time. So they have major partnerships with Stellantis, which is an automotive giant, helping to build high-volume manufacturing plant, and United Airlines is a major customer. 2026, this year, is the operational readiness with test flights happening in Dubai and major hubs like LA and New York. So getting the infrastructure ready, revenue phase is finally within sight, and it isn't just selling planes or selling time. If they successfully launch air taxis in 2026-27, the total addressable market is in the trillions. So buying under $10 is a bet on Tesla of the Sky. This is going to be huge, and when I get this position and it grows, if it grows without y'all, then y'all missed out, because I'm gonna show you what it's gonna do. And put this on your radar. So that's three hot ones. SMR, Archer, GRAB. Put these three stocks on your radar for nice potential upside. And the caveat for Archer, I'd be remiss if I didn't tell you this, is this aviation. The Federal Aviation Administration giving them getting them to be regulated. Certification. I mean, getting certification approval from the FAA. I'm getting tongue tied a little bit because it's a lot of information, but I want you to have the information on the stock so you can make informed decisions and give you a head start on doing your own due diligence, because I'm doing mine. With that being said, let's get ready to make some money. Let's get ready to grow this small account. I got a small account hustle going on where I'm taking my account from $1,000 to $100,000 this year, and join me on that journey. I have videos coming out. Here's a video more for long-term investing, but I will make swing trades. I will swing options on the right setup. So stay tuned if you want to make some money or if you want to invest. Either way, I got you covered. With that being said, I'm out of here. Peace.